Good morning, ladies and gentlemen. How are you? My name's Newman. I'm the Head of Distribution for HUB24, and I'd like to welcome you to our HUBsights webinar for this month. This has probably been one of our most popular webinars that we've run. We're expecting quite a number of people online. Just for those who haven't attended before, a few housekeeping items. Throughout the presentation, we actually keep the speakers muted, which helps with the removal of background noise. If you have any questions, you can use your webinar control panel to nominate those questions. We will be leaving time at the end for questions, so we'll certainly try and cover those. There'll be a question and answer session, as I mentioned, towards the end. And at the end of this presentation, we'll actually be sending a PDF version of my presentation out to those who have attended today, and there's also a recording of this. So I hope you enjoy today's presentation. I've done this on a number of occasions to many audiences, and it certainly has been popular. Okay, so the first thing probably to cover here is making sure we get some of the language right. And this has probably been one of the biggest things that has caused confusion around just what is Bitcoin, what is cryptocurrency, and what is blockchain. I can absolutely guarantee you that if you get on top of this, you'll sound far more intelligent and far more interesting at barbecues and dinner parties for about 5 minutes, and then thereafter you'll probably have enough knowledge to make yourself dangerous in this world. So today I'm really going to go through a build of knowledge which starts from the very basics and trying to break down each of these concepts, and then expanding upon that to talk about what this might actually mean, one, to the financial advice industry, but also what conversations you might face as advisors as this evolves. So I'll start with blockchain to start. So blockchain is probably the area that I'll get a little bit more detailed on, and that will actually be a bit about midway through the presentation. But we'll start with this as a foundation. Think of blockchain as a little bit like what the internet is. Okay, so blockchain is actually a technology, and it enables the existence of things like Bitcoin, which is actually a cryptocurrency. Now, these concepts I'm going to repeat through the presentation, but they'll make sense. A cryptocurrency, which we'll be talking about, is just a digital currency in which encryption techniques are used to regulate its value and its transfer. So when you hear cryptocurrency, best analogy I have is think a little bit like any other currency, whether it be US dollar or euros or Australian dollars. Actually, a Bitcoin is just one of many currencies that exist and have been created that operate on this platform known as blockchain. So I'll just restate that again. Blockchain, a bit like the internet for passing of information, and some really, really smart maths that sits behind it, which I'll talk about. Cryptocurrency is just a digital currency as opposed to a monetary currency that we're used to, and Bitcoin is one of those. The big difference that I think people have got around Bitcoin is it's probably the most well-known currency going around at the moment. And it was actually created in 2009 by an unknown person or persons using an alias, Satoshi Nakamoto. And Bitcoin was actually launched on a blog site, and it's a paper, so you can actually read the original Bitcoin paper, which was authored by Satoshi. The key concept was pretty groundbreaking, which said there's a better way to transact and to have a store of value and create a currency and value. And the main part of that worked around mathematical algorithms. The main thing that people identified with this is that most cryptocurrencies, and mainly Bitcoin, allows for the removal of middlemen by way of fees, but also allows for people to remain anonymous. And Bitcoin as a currency probably became most famous as a result of the Silk Road illegal website, which was the main currency that was used on that. So a little bit, I'm going to try and keep this reasonably light. So again, try and make your barbecue conversations a bit more fun. The creator, as I mentioned, Satoshi Nakamoto, is still actually a mystery figure. No one knows whether it's a single person or a group of people. But I think we should be very proud that an Australian and a Sydney-sider from the Northern Beaches by the name of Craig Wright actually is now claiming to be Satoshi. He recently was investigated by the AFP and also is a mathematician and probably one of the smartest minds going around. So maybe it's a little bit more plausible than we might think. So we're going to dig a little bit more into Bitcoin and some of the facts here. With Bitcoins, there are actually a limited number of Bitcoins that will ever be produced. I'm going to talk about what a Bitcoin value is in a moment. And the creation of these Bitcoins is kind of an interesting concept. At the moment in the world, there is actually only 16 million Bitcoins. So those 16 million Bitcoins have been created since the introduction of the Bitcoin currency back in 2009. At the end, there'll only be over 21 million Bitcoins created. So this whole concept of Bitcoins is about supply and demand, and a supply coming into the market is actually determined by a mathematical algorithm that changes every single day. So the number of Bitcoins created or available is actually determined, and the pace of that is through some mini industries that exist. So I'd like you to think about Bitcoins in this concept now a little bit like gold. So gold, there's a limited supply that creates its value. It's a store of value. People think that there's some speculation about whether it's going up and down. Bitcoin and cryptocurrencies work the same way here. This concept of limited number of supply and how are they created, I'm going to drop into in a moment. But this concept of mining Bitcoins, we're going to spend about 10 minutes looking at. So with Bitcoin, some interesting facts there. Transactions of Bitcoins are now mainstream, with most major exchanges and finance companies looking at the impact. At the moment, for Bitcoins, there are now Bitcoin ATMs. There is 1,700 Bitcoin ATMs worldwide. You can go down to Martin Place or to Westfield in Sydney, and there's Bitcoin ATMs there as well. And there's a plan to roll out some 3,000 Bitcoin ATMs across Australia going forward. The Bitcoin currency has a value. It goes up and down. In this slide, you'll see here, I mentioned that the value 3 weeks ago was $5,628. I did this presentation to a bunch of mums and dads, and we talked about that and thinking that was a ridiculously high price for a cryptocurrency. Today, the value is actually 9,616. When we updated the slides last night, it was 9,035. And in the week just gone, the currency of Bitcoin has actually fluctuated up to 30%. So, not for the faint-hearted, and just something to think about here is this sort of information that is in the press every day. If you type in Bitcoin value on the internet, it's probably one of the biggest threads and searches out there. So having some knowledge around this is important. The FBI is actually one of the biggest holders of Bitcoins in the world, and the reason for that is that when they closed down Silk Road, which was an underground website for drugs and illicit material, they actually had a proceeds of crime, and they seized about 144,000 Bitcoins. Now these are not like coins that we'd find in our normal wallet, but this is actually unlocking of computers and the encryption codes that allowed access to these were found. At that time, that $120 million, they thought that was a great proceeds of crime. At the actual time that they did that, the price of a Bitcoin was $213. So with a price at the moment of 9,616, that $120 million for the FBI is now worth $1.2 billion. So I guess the FBI are thinking that they're fairly smart in their seizures. So why the interest in Bitcoin? I think one of the key things that's come about is that it has hit mainstream media. Some people have made some money out of it, but originally the interest in Bitcoin came about because you could actually purchase things anonymously, and surprisingly, a lot of people like to do that. International payments now are easy and cheap. Bitcoins aren't actually tied to an individual country, and there's a removal of a lot of the middleman expenses. So one of the areas that is getting the most interest in Bitcoins is small business. So small business operators are sick of paying merchant fees, transaction fees, bank fees, credit card fees, really see Bitcoin as a currency and an exchange and a micro network where they might be able to exchange goods and services without the transaction fees. What's also happening in the interest at the moment is that people are just actually buying them as an investment. I think that term of an investment would be probably a big stretch. Anyone who's investing, so-called investing in Bitcoins, you'd probably suggest it's more speculating than actually investing. But the interest that we're seeing is absolutely huge. Okay, so how do you go about possessing a Bitcoin? So there's a couple of ways to go about it. The first one is you can actually go and buy a Bitcoin on an exchange. So there's a whole range of marketplaces where you can actually purchase and exchange what we would know as hard cash for Bitcoins. So that is actually something that happens. You can move in and out of a cryptocurrency with real currencies and the like throughout the world. So the exchanges allow for that. MTGOX is one of the largest Bitcoin exchanges, and you'll see with their volumes that go through there, there's a pretty rapid trade that happens every day in relation to people exchanging the value. People also can actually avoid just using an exchange. That's where you might get your initial purchase, but then you can actually just exchange Bitcoins as you would any other currency. So the example I'd use here is, I've just entered a new country. Where do I get that local currency? I'd go to an FX dealer or an exchange to purchase it. Once I'm in country, or I'm in possession of a currency, then I can just transfer money through buying goods and services, or actually just using mobile apps and wallets as we normally expect. The other way of actually gaining Bitcoins, as opposed to buying them with hard currency, is actually this concept of mining. And this is where it does start to stretch your brain a little bit. And I will ask you to keep thinking about this concept of gold and how gold is actually found in the store of value and the cost of production in that process. So I mentioned earlier on that there's 16 million Bitcoins currently in circulation. The release of new Bitcoins actually happens on a progressive algorithm. So ultimately we said there'd be 21 million Bitcoins in circulation. The creation of Bitcoins comes about through this concept of mining. And what you actually do for mining is that you let your computer, or you purchase computers that are linked by a Bitcoin network, to actually calculate complex mathematical equations. Now those mathematical equations are actually blockchain style equations, and I'm going to talk about that in a moment. So effectively, you think about it, the existence of this currency exists through people collectively putting their networks together without a central bank and utilising their computer power to facilitate these algorithms that go backwards and forwards in the exchange of this currency. So to actually make your computer available, you can get paid. And that concept of being paid is called mining, and you get a transaction fee for that. So people compete to mine for Bitcoins, and those puzzles that they solve will allow the creation on this algorithm of new coins progressively. Now the rate at which these are released varies. So the more people that are mining and the more people that are putting their computers together, it becomes ever increasingly more difficult to actually be rewarded. So the time and effort effectively to mine a coin becomes variable. One of the biggest costs associated with Bitcoin mining is actually electricity. So the concept of going out, and people literally try and put together server farms or linked computers to run these algorithms, the cost and the variable cost of the purchase of the equipment, the software, and the paying for the electricity actually determines whether it's economical to be a miner or not. So this concept of extracting gold and extracting Bitcoins is actually quite similar. So the value of a Bitcoin at maybe $7,000 and an electricity price that might be increasing might make the concept in Australia of mining a Bitcoin uneconomical. The value of a Bitcoin mined at $9,000 and a place in the world where you've got a lower cost of electricity might make the economics of Bitcoin mining totally different. So that concept of mining, if you hear people talking about where the Bitcoins come from, they are created through this original algorithm that Satoshi put together. So if you can get your mind around that, that's probably one of the harder concepts to deal with. So if we go to the next one here, with Bitcoin mining, just thinking along these lines here, with paper money, governments decide when and where to print and distribute money. And as you know, with things like quantitative easing and fiscal stimulus, at any stage, there's impacts on the flow of money. With a Bitcoin, the supply of money, as I mentioned, is through solving these algorithms. And the oversupply of this is probably one of the biggest issues that people are concerned about. So this whole value of Bitcoin is premised on the fact that those algorithms work and there's a limited supply. So the big question is, what happens if someone actually does break the code and they can just go and print their own money and no one else knows about it? That's one of the issues that people see as concerning. Something else to think about is that with a Bitcoin network that is supported by people mining and supporting that, what happens when 21 million Bitcoins exist and there's no longer a reward for mining? The integrity of the networks that support Bitcoin then come into question. And most people in this speculative mode at the moment are not taking those two things into account. They're just saying it's fun, we do this, the value goes up, it's all great. Some of the early purchases were with Bitcoin were things like pizzas, software, and the like. And the actual store of that value was on people's home PCs. There was a person in the UK that had got themselves literally, I think, into the tens of Bitcoins, probably circa 100 Bitcoins, through his PC app. And with that PC was all the encrypted information. The value of that PC is worth about $3 million if someone can find it. The rumour, whether it's fact or not, is that that person actually spent a fair bit of time trying to recover it. Okay, I'm just going to dig a little bit more into this mining concept because this is kind of one of the areas that you will hear people struggling to get their head around. So Bitcoin mining, when we're using our computers, we use the CPU or the central processing unit of your computer. And that's purpose-built for processing a whole range of computational requirements from running Excel, Microsoft to the internet and the like. However, there's other parts of your computer or chips being GPUs, which is graphical processing units, which are actually more adept at mining. So there's been a mini industry created off the back of this cryptocurrency approach, where they now build purpose-built PCs that do nothing much other than utilize CPU and GPU to run those algorithms. And they actually now operate under a thing called ASIC, and that's not our regulator, that's actually application-specific integrated chips. And the idea of this is that you buy these PCs that are purpose-built to run algorithms, you link them together and you run it as quickly as you can, and by running these algorithms, which is literally having your PC running in the background, you'll be rewarded with Bitcoins. So there are the biggest users of this at the moment is coming out of China, whereby you effectively have server farms trying to crack the cryptocurrency algorithms and to create bitcoins at a faster rate before it becomes mathematically more and more difficult. So that concept of mining is one to really get your mind around. It touches on the mathematics associated with this process, but really is probably the more confusing concepts. Owning a Bitcoin, you actually store it just like in a digital wallet. I think that the concept of digital wallets would be broadly understood by most people these days. Just as you have Google wallets and you have some of the ANZ wallets and the like, it's the same concept. It's just a currency that you might have available there. It's like a virtual bank that can receive Bitcoins, and you can actually pay for goods. So the whole range of vendors who now accept Bitcoins as a currency that has a value. The difference with the wallets that you have here, just like you might have a Google wallet or an ANZ wallet, the Bitcoin wallets are not insured or government-backed. So this concept of trust and removal of the middleman or the known trusted entity is a big leap. Now this big leap I'll talk about in a moment when we get on to blockchain. And you might think, who would actually be interested in this? It sounds kind of speculative, a bit kind of edgy. This concept of trust and blockchain that sits behind Bitcoin is the really fundamental change that is going through the world at the moment, that most businesses are assessing with some detail, because this concept of the removal of a known and trusted entity and the delegation of that to algorithms and linked computers of people that we don't know is a pretty monumental mind shift. So trading Bitcoins, same sort of thing, it's a currency. You can trade currencies every day. The volatility of Bitcoin, I think over the last week, was pretty substantial. I think it went up 30%, down 30% almost in the week. Yesterday's trading volume for Bitcoins was 575,000 trades, or the volume of that. The value of that was $4.16 billion in Bitcoin trades went through yesterday. The spike in Bitcoin price during the week, there was a substantial spike and then fall in Bitcoin value was quite simply one of the ticker tapes that appear on one of the trading sites had a bug in it, and it represented the Bitcoin price at 15,000 US, as opposed to its true value back at around 7,000 US. So market actually thought it's getting ahead of us. Those thought that they were going to sell out there, so you saw trading volumes kick up there. The biggest trading market of Bitcoins is actually the conversion of Bitcoin to Chinese yuan or yuan. So that market and the exchange of dollars into different currency is absolutely alive and well. At the moment, there are a number of capital raisings and IPOs and crowdfunding that is actually being facilitated in the currency of Bitcoins. And most of the related IPOs that they're doing are for ventures related to currency mining and these types of exchanges. So anything that you would normally consider around an IPO for gold or an IPO for a tech company or something related, this currency or this form of currency is actually now moving into the mainstream. So as you'll see, there's a fairly big shift from where it was to where it is now. This diagram here, it's a little bit hard to see, but once I send it through to you as a slide, you'll see the range of currencies out there. There are currently about, I think there's about 30 plus cryptocurrencies in the market. Bitcoin's probably the well-known. This is a quick snapshot of cryptocurrencies, how they work. Some have closed, some have failed. But just as you would see in any currency chart across the world, they're there. So some of the great names, I think that's probably one of the interesting ones. You've got Litecoin, Namecoin, Swiftcoin, Terracoin, Peer coin, the black coin, burst coin, the coin. So there's some fairly interesting descriptors there. The interesting thing about this chart is that it actually talks about the nature of how these currencies exist and a little bit of background on them. So as an example, there's someone like Omni is both digital and the communications protocol. So this crossover between really geeky stuff like technology and cryptocurrencies is happening. So I'm just going to pause. So we've talked about this concept of a new currency, which is called a digital currency. It's a cryptocurrency. We've talked about how the creation of it was through a paper written by someone who we don't know, who may live in Sydney. We have talked about the fact that it's an ever more difficult algorithm that is used, and you can actually create new supply by utilising computers for algorithms. And we've also discussed the fact that there's only 16 million in issuance, and at any one point there'll only ever be 21 million. So that's what we've covered so far, and we've talked about some mini industries that are developing off the back of that. We've talked about the fact that the currency and the trading of that is also alive and well. What I mentioned at the very beginning is this concept of blockchain. Now, blockchain is actually the real stuff that you want to be interested in my belief. So blockchain is actually the technology that sits behind how cryptocurrency works. The best way to consider this is that blockchain is to Bitcoin as the internet is to email. So when people think about how important the internet is, they go, yes, the internet's really important, that's a really powerful thing. When you think in this term, it's actually the blockchain that's really important. Bitcoin is the equivalent of email. So you kind of get this thing that there's some really serious stuff that's happening in blockchain. At a very high level, blockchain is actually just a decentralized register. And this decentralized register, this concept I'll explain to you in fairly simple terms. At the moment, for a transaction to take place most places around the world, you have to have someone you trust in between, whether it be a government, an institution, whoever it might be, a sovereign fund. Because you know that once you hand something over, you'll get something back into the store of value. Blockchain effectively is the collection of data related to transactions that is held in a distributed fashion. So blockchain, this term will be usually used in the next sentence. Blockchain is a decentralized or distributed ledger. Just like in accounting terms, a ledger is where you hold all the information. A blockchain actually holds all those transactions in other places. If you look at a decentralized register, if we wanted to exchange the value over the internet, we'd have to go through some sort of traditional method. We'd rely on third parties like banks and governments. This distributed ledger is a little bit like if you had a bunch of people in a room and two of you wanted to do a transaction and you were in the middle of the room and there was a circle of people around you, thinking of them like the blockchain. They would be sitting there witnessing that transaction and they would be recording that transaction. That makes sense? It's kind of, there's not like a person in the middle of the room called a bank. There's two people doing business with each other and then a collection of others. Another good analogy I've heard for understanding the concept of blockchain is, if you imagine a whole bunch of computers that are operating in remote locations and they're all accessing one big Excel spreadsheet. And that big Excel spreadsheet spreads its way across all of those computers and all of those suburbs where they're operating. And every time a change is made in that Excel spreadsheet, every person that accesses that spreadsheet has the latest version of it. Okay, so it's changing before your eyes. That concept is called the block. And that storing that we talked about before is how it takes place. This graph here might be a little hard to see, but there's a concept which, if you look at the very bottom where you can see a whole bunch of blocks joined together. This is the core concept of blockchain and those algorithms that I talked about earlier in the presentation around how Bitcoins are held secure and how blockchain is the backbone of that. If you look at that first block on the far left, not the coloured one on the far right, imagine this. That first block represents a whole bunch of transactions that happened around the world at any one time. That's the algorithm. It shows everything that happened and then it is validated. Okay, we all agreed something happened and everyone agrees that a transaction took place and there's a record of it. All those computer algorithms that we're talking about, that's what they're determining, that it did happen. A couple of minutes later, another transaction happens, and this creates the next block. And so that first block is a foundation, and anything that happened in the first block plus anything that occurred in the second tranche of transactions is then validated again. So the block that is created 1 minute ago is actually a whole sequence of prior transactions that have been historically validated by those algorithms. So if you can imagine that chain of data, how big that gets and how difficult that would be to break, and all that computer power is actually the thing that creates the register. So that register is a history of the first transaction, the second transaction times millions, and is validated progressively. And that is this, the removal of trust of a central ledger is actually transported into that concept, which is a mathematical algorithm, which is near impossible to crack. So blockchain, as a backbone, then actually has a lot more utility about it. It doesn't just become something that's for currency. It's best to be thought about as anywhere where a central point of register is required and a central point of trust is required. And usually that central point of trust is fulfilled by companies. Wrap accounts, master trust, exchanges are all basically requiring someone to stand in the middle and say, you need to trust us. We're the custodian, we're HSBC, whoever it might be. This concept of block actually does potentially remove that. And then you think about what the consequences might be to those organisations and to the cost of doing business. So who's looking at blockchain at the moment? This is not just a bunch of kind of unwashed uni students with too much time on their hands. HUB24 operates out of the ASX building here in Sydney. ASX recently commenced a process of evaluating the replacement of actually the CHESS system. That happened in 2015. And in 2016, the ASX selected Digital Asset as a technology partner to develop and test and demonstrate a working prototype of a platform which was built around blockchain. So our core registry that we know, or exchange that we know in Australia, is looking at this technology seriously. If we then have a look at different industries globally, the Maersk shipping line is looking at this and trialling this in their Belgium port of Antwerp. And the idea of this is, what's a central register of where all of our cargo is? What's a central register of transactions that are happening? So the sorts of costs they're trying to save there is existing software systems, existing hauling systems, and centralised accounting of the logistics of global shipping. So straight away, again, blockchain, think about the internet. Do you think your whole business would run on the internet or all your transactions? It's the same sort of shift in thinking. In banking, I love this. I don't know if this is a good thing or not, but who's looking at blockchain in banking? According to Accenture, 9 in 10 executives said that their bank are currently exploring the use of blockchain. So there'll be whole little strategy divisions in all of the major banks that are trying to work out what this might mean to one of their major revenue sources, whereby they sit in the middle of all transactions. Other areas that are looked at, there's a bit of a running joke that if you're in Silicon Valley and standing in a motel room by yourself and mention the word blockchain, there's a pretty good chance that someone will walk through the door and hand you money. One of the biggest venture capital areas of growth outside of bioscience looks at actually the change in block and how that might affect people. Also, another one that came out, and if you have a look at this week's press, VanEck launched a cryptocurrency price indices. So you have to link through to their New York site to see this. But this is now becoming a market where you can see indices of cryptocurrencies. In August, VanEck also announced that their intent to create a crypto ETF, which was accessing those indices, was also underway, but they put a delay on that. So it's gone from the start of this presentation where we looked at stuff that's kind of a bit weird and something that you see on the news called Bitcoin and a bit speculative, to ramping up into understanding there's a backbone of technology that has a lot more utility outside of just a currency, and is something that could potentially be an Uber-like change in financial services, whereby just like Uber got rid of the taxi driver as the middleman, or the taxi company, you end up with something like a blockchain as well. So, closing thoughts. I think I've captured it there. It's a bit like a program like Uber. Instead of taking taxis out of the equation from go to A to B, you actually take the middleman out to exchange money between A to B. There's many areas. If anyone wants to look at this, it's really simple. Look at this in Amazon, any bookstores, any online sites, any blogs. You can get articles every day on this. But once you've got the concepts, it's pretty easy. What I will actually do is now open up to questions, and hopefully I'll be able to cover as many of those as we can. Or any thoughts? Any questions that we want to cover? So one of the questions that did come in earlier related to what's more important, and the question of what's more important, is it Bitcoin or blockchain? I'd be saying, if I was going to look at anything and talk to clients about this topic, I'd tell them to go and understand blockchain before anything else. That's actually the real stuff. It's a bit like understanding how the internet works for e-commerce. One of the comments that we've had come through is, when can I buy Bitcoin on Hub? It's interesting that we're asked. We do have a multi-currency solution that we are working on for a 2018 release. And just like any currency, it's fairly likely that by the way things have evolved, they'll also appear there. Other currency or other questions that we have actually had come through of late have been, what do you say to clients about this? The seminar I did where we had literally 60 or 70 people in the room, we had 2 sessions running concurrently. One was on cryptocurrency and Bitcoin, and one was on retirement and pension benefits. And they cancelled the retirement and pension benefits session, and everyone came and looked at this. Now, it doesn't mean it was a particularly interesting preso, but what it actually did show is that the average mum and dad is looking at this stuff, and I think there's a few stars in people's eyes, and so some wise counsel from advisors is certainly worthwhile. So one of the questions here that I've got is, how long do you think it will take for all Bitcoins to be mined, if it is getting exponentially harder to obtain Bitcoins from mining? Yeah, it's a really good question. The way it's going, it looks like it'll be a 2024. That's kind of what's starting to evolve is that case. But again, it's a little bit like anything that you chase, it becomes more and more difficult. And some people might give up and the cost will decrease. Good question here, which is how is Hub looking at using blockchain in platform admin, if at all? That is a good question. We're doing a lot of the looking at this. At the moment, like any platform, a wrap or a transactional platform, we're seen as a trusted entity. And as a part of that trusted entity, we'd be very interested to make sure that there's not another trusted entity that might interpose themselves into the work that we do. So there's one which is there a risk of us being Ubered by blockchain? Yes, that's something we look at every day. The other part, though, is that many of the suppliers and many of the exchanges that we access, many of the custodians globally and the like, we require them as a trusted entity. So as any business would look at, we are always looking to see if there's a cheaper way to access the same opportunities, potentially at a lower cost. The reality of this, though, is that when you're dealing with such vast amounts of money, it's not just about cost and ease, it's actually about trust. And something that we'd certainly need to look at is whether it would be something we could absolutely empirically trust as being foolproof and safe and backed. And I think there's a pretty big test to be done on that before we'd take any practical steps along that way. So that's the last of the questions that we've got there. Thank you very much for those who have attended. We will send out this presentation, and of course my details are there. If anyone wants to give me a buzz over the coming week or so and delve further into it, feel free. But it really is an interesting topic if you start to have a look at it. For those on the line, thank you very much on behalf of HUB24 for your support. And we really do value the relationships that we have, so thank you very much.